You are listening to ChartingWealth.com for Monday, the 25th of April, 2016. As we always do, let's jump right into the market. We're looking at IYY. We still have the blue MACD over the red signal line, so we are still in positive territory as far as our two-day chart goes. However, the last two-day candle we have formed after three previous two-day up candles, nice good up candles with a strong trend line, is a negative open box down candle. What does that mean? Well, that means that that nice upward movement has lost a considerable amount of energy now. We don't have a cross through yet, but we're sitting right on top of that two-day trend line as we look at our two-day candles. So those prior 6 days, we see the last 2 days and an 8-day total movement being negative, although the MACD again is still above the two-day trend, is still positive, and the derivative oscillator still actually continued to gain a little bit of energy over those last 2 days. Let's look intraday and see what we see. And again, IYY is a total market index fund, so it shows the entire market. We see that on Friday was a down afternoon, a down morning, and a bit of an up afternoon. Looks like the price chart is sitting just right there on the two-day trend line. We did cross over going down in the morning on the Friday the 22nd. We had a crossover on the short chart MACD, the 4-hour MACD, and our derivative oscillator flipped over at the same time. So again, don't have the real alarm bells going off with the crossover of the two-day trend line, but not a positive move for that continued up movement. We'll see how things shape up with the total market on Monday. Now we're going to go back to our two-day chart and we're going to take a look at the S&P 500. Oh, by the way, IYY was up 0.04% for the day, so barely an up day there. The SPY broke even. It was just 0.0 across the board, so it broke even. The chart looks somewhat similar to the total market. And again, remember the S&P 500 or 500 big volume stock, so it many times does look similar. We can see that the derivative oscillator actually lost a little bit of energy up, unlike the total chart. And we do again have a red spinning top sitting right on the two-day trend line. When we look at our two-day chart, we look at our 4-hour chart. Down movement in the morning, some up movement in the afternoon, crossover going down in the morning, followed directly by a crossover on the derivative oscillator. So that is where we are on the S&P 500. Now we're going to range out to our two-day chart. We're going to take a look next at the Qs. What is that? Well, that's the NASDAQ 100. Big down day, 1.53% down. Such a down day. In one day it crossed over the two-day trend line. Huge down movement that actually ended not as far down as we saw the movement take place. We have a long wick on the bottom of that two-day candle. Even with that powerful movement, not enough to cross over yet going down, but it's getting awfully close on the two-day chart. Derivative oscillator lost a lot of its energy. Almost went negative, but not quite on the two-day chart. Still, again, we can't call it yet. It has not crossed over. It may happen on Monday. We see a huge down morning and then a down afternoon. Also, we've been calling as far as the crossover since the 19th in the morning when the chart crossed over, that is the Qs, the NASDAQ 100 crossed over going down, immediately following the afternoon by the derivative oscillator crossing over after the MACD crossed over. So that is where we are. We have a strong move down in the technology stocks, penetrating in the morning very deeply the two-day trend line. So we'll continue to see how Monday shapes up for all three of these indexes, but particularly for the Qs, again down 1.53%. Lastly, we're going to look at gold. What's gold done? Well, gold was down 1.28%. What do we see gold doing? Well, pretty much moving sideways. We now have a spinning top is the way the last two-day candle ended on the 22nd. What does that mean? A spinning top means lots of indecision, a lot of up movement and down movement, just a little bit of movement between the two intermeasurements, and what we see is the equivalent of a spinning top. The movement did stay above the two-day trend line. We can see on our two-day chart that we are in a confirmed down move since the 15th, and we had some substantial down movement on the two-day chart until about and when I say 15th, the 15th of March. We had confirmed down movement strong until about the 24th of March, and then the market has been sliding sideways a lot. Not a lot of movement one way or the other. We do have up movement on the chart since around the 6th of April, but again, not enough up movement to push over the MACD and not enough to push over the derivative oscillator. If we look at the intraday movement, we look at the 4-hour chart, and we see that there was a crossover going up back on the 19th of April, and then a crossover going down on Friday the 22nd. Gold, again, isn't a confirmed down move on the large chart. So if you're going to follow our rule when gold crosses over going in the same direction, that is a point to look at getting in. However, what have we been saying about gold with this sideways slide? It makes it very difficult to make have any real confidence in those moves in gold, but you do have the short chart paralleling the long-term down movement we've seen, a lot with a sideways slip, in that large two-day chart. That is where the markets ended up for us on Friday. We're going to be recording here very shortly our weekly review and forecast. If you've not heard that yet, please make sure to tune in. We have a separate podcast on iTunes for that. We also have a YouTube channel where all of these are presented, and you can always go to our website, chartingwealth.com, and sign up to receive our newsletter, which includes the daily forecast every day, daily review, and the weekly review and forecast once a week. And also all of our trainings are there, all sorts of great stuff. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We try to be there for you. If you really appreciate what we do, go to iTunes, give us a 5-star rating and say something nice about us. You can do that on YouTube also. Thank you so much. God bless. Hope you have a great week trading. From chartingwealth.com.